Hi friends, Simit here from InformedTrades.com. Today is Friday, May 16th, time for our daily Forex chart review. Basically, in these sessions, I share the trades I'm placing, adjustments to existing positions that I have on in the market. Of course, if any of this information is unfamiliar to you, you have any questions, check out InformedTrades.com. We have a large archive of learning material covering a wide variety of methods used to trade, markets used to trade, not just my style of trading, which is price action oriented trading applied to the Forex market, but many other styles of trading, many other markets. Check out Informed Trades, share your knowledge, ask questions, register as a member, set up a practice account, share your trades. We can all sort of learn together. Okay, let's take a look at the charts. First up, as is customary, I like to start with the gold chart. As I have a long-term position in gold, that's always a major interest of mine. A considerable portion of my net wealth is in gold. So I like to see how that's shaping up. Price is now at 1280, or you can see, excuse me, there's major support at 1280, which is being maintained, right? So we've tested that 1, 2, 3 times. Price has tested that level, has not been able to sustain a close below that, which I think is pretty encouraging for the bulls. However, we do have, for the bears, or from a bearish perspective, we still are below the 50 simple moving average, this blue line, and the 200 exponential moving average, this whatever color this is, lime green, I guess, maybe. That line. So if we can close above those, and we need to clear 1320, then we're in a little bit of a safer move. If you look at the ABCD pattern, A, B, C, D. Now normally for this pattern to truly be valid, we should have already closed above here. We should be like right around here by now. But ABCD, it's sort of valid. I'm saying it's sort of valid because it hasn't closed below 1280, major support here. It hasn't closed below point C. That's sort of arguing 1445 by mid-June. So we have about a month, a little less than that. Are we going to be able to go $150 or $140 somewhere around there in a month or 3 weeks? It's definitely possible. Ideally though, for that pattern to truly be maintained, we would be closer onto the upslope of this on the way to point D. So that's a chart of gold, basically in the same situation. As long as 1280 isn't breached, I think that's positive for the bulls. Now let's get to the trades that I have on. Just 1 second here while I pull them up. Okay, first one is Canada Swiss. Now just to provide some context, I have at the moment 5 trades on. One just got filled, like literally seconds ago. I have 5 trades on at the moment. 1, 2, 3 of them have not been de-risked. De-risked me. 2 of them, let's put it another way. 2 of them, I moved my stop to break even. The position has moved in my favor. I moved my stop to break even. So I've eliminated risk on those trades. I have risk on 3 trades now. If my stop were to hit all my positions this second, or the price were to hit all my stops this second, I would lose money on 3 trades, which would come out to 0.75% of my account. So I still have room for 1 more trade where I can risk 0.25% of my account. That's basically how I view trading. When I put on a trade, I'll risk 0.25% per trade. I generally don't risk more than 1% of my account balance at any time. So once I move once I move my stop to break even on a given trade, that frees up some risk that I can deploy to another trade. So right now I still have room for 1 more trade if an opportunity were to come up. Canada Swiss, this is one of the trades that's been de-risked. Anytime you see an orange line on these charts here that I've shared, that's the point I de-risk a trade. Once price closes at or above this level, I will move my stop to break even. I've already done that in Canada Swiss, still holding out for the target here. So let's see if we get there. Once a trade has been de-risked, it's pretty simple for me to just sit there and watch. Another trade that I have that's been de-risked at the moment is Pound Aussie. Let me pull that up. Now, I'm a little concerned because I am seeing, what's going on here? Having trouble typing today. There we go, Pound Aussie. Okay, we are seeing some rallying in the pound, or some weakness in I'm seeing some weakness in the Australian dollar across the board. So that's a little concerning or a little disappointing. However, let's see if we stay below this trend line here. Also, we're still below the 50 simple moving average. And worst case scenario, price comes up back here. The trade has already been de-risked, right? We've closed at or below on May 9th, we were able to de-risk the trade because price closed below the dashed orange line. It closed below a previous resistance level, right? Resistance was here, January 14th, the minor resistance level. Once we close below that, I'll move my stop to break even. Let's see if that level is defended now. So maybe the price is coming back up here. Let's see if the bears step in and push it down. So that trade has been de-risked. Profit is at 77.28. So those two trades have been de-risked. The other trades have not been de-risked. One other final comment on Pound Aussie is that let's see how price shapes up, but it's possible at 77.28 that it'll only take half off. I'll take half off here and allow for a further move, possibly down to all the way down here maybe. Or maybe well, up here might be more likely, 74. We'll see. I would like to hold out for a larger gain on Pound Aussie, but of course first we have to get down here to begin with. And like I mentioned, in any event, that trade has been de-risked, so I won't be losing any money on it, which is important. Next up, Kiwi dollar had this trade filled a couple days ago. Not looking super great. You know, it's always nice to see price go immediately in your favor. That's the excuse me, that's the goal. But we are still, you know, I entered here at a 61.8 Fibonacci retracement level, at a support level as established going back here, March 18th. Near the 50 simple moving average. So I'm basically at break even here, slightly in the money here. Let's see if we can excuse me, hold out for a higher target. The next thing to watch for on Kiwi dollar is if we can close at or above 86.86. We did peak above it, but then the bears came out. So you see this, there are some bears at the resistance level. Let's see if we can clear above it, then I can move my stop to break even. Dollar Canada, next up. Nope. Dollar Canada bear trend here. This is going reasonably well. Again, it did touch the resistance level, or support level, excuse me, that I identified at 108.48 and then bounce back up. If we can close at or below this, I will move my stop to break even. My stop right now is here, and move it down here. So far, so good on this one, though. I think it's progressing reasonably well. You know, and it's similar in a lot of ways to my Canada Swiss position, which are in both these positions, I'm basically speculating on a appreciation of the Canadian dollar, and that so far is working well. Canadian dollar really lost a lot of money for months, so I think it's due for a little bit of retracement. And my order that just got filled less than 10 minutes ago is Euro US dollar. And this is one of my favorite patterns ever. Hammer off support. You know, yesterday's candle. Here's a support level. You know, it goes back here. We had the support in April. And kind of, you could say, a little bit of support here in March. So support level here, and then when you see a hammer form off that, that really tells me that bulls are stepping in, defending that level. That level's been acknowledged. Also, we do have from this swing low all the way to this swing high. You know, we're in that key Fibonacci level. So this is the 50, this is 61.8, so we're right in between that. We have a hammer off support. The price is still trending up. So with all these factors, and if you look at Euro Aussie, Euro Canada, those were positions or pairs that I thought were showing some bullishness on the euro. In fact, let's take a quick look. But basically, the basic idea is, you know, I saw some bullishness on the euro on numerous pairs, and I really saw a lot of a really favorable setup, hammer off support on euro dollar. So that was the one I went with. You can see here, similar type of candlestick. This to me looks like price is gearing up. It's been declining, gearing up to go back up. And we see something similar on Euro Canada. Yeah. So this is not as encouraging, but you still have that little bit of a long wick here. It shows maybe prices, maybe some bears are stepping in, or excuse me, bulls are stepping in. The one thing on euro dollar I also want to mention, you know, we're below the 50 simple moving average, that's one thing that would cause me to hesitate a little bit. But in light of all the other factors and the fact that price in general is still sloping upwards, right? And we do have a pattern of higher lows, and well, one exception is this one right here. We have this long wick here, but we have a pattern of higher highs here. So I thought there was enough evidence that there was still a bullish trend, that going long is the right decision here, and that is trading with the trend. Of course, we'll find out if that was the right trade or right decision, probably sometime next week. That's about it for this week. Hope everyone enjoys their weekend. Of course, if you have any questions, anything you want to add, check out InformedTrades.com. Join us, set up a practice account, start a blog. We'd love to have you in our community. That's about it for this week, and we'll see you next week. Take care.